Hi, I'm Max Keiser, and this is the Keiser Report. Hey, Barack Obama, get a clue. I notice that you're spending a lot of money in Afghanistan, Iraq. There's all kinds of talk about you threatening Iran with your good buddy Israel. What about this story? Mexico. There's a drug gang in Mexico that's threatening Arizona police. Police in an Arizona border city are on heightened alert after receiving a warning from a Mexican drug cartel that officers may be targeted if they carry out off-duty drug busts, authorities said on Tuesday. $1 trillion military budget. You're blowing it. Iraq, Afghanistan, Iran, aid to Israel. What about America? You remember that place? But let's get some more headlines from Stacy Herbert. Stacy Herbert, what's happening?
Max, I have invisible gorillas, invisible pay, but first of all, we've got financial stimulus versus fiscal austerity. We've got this war between fluffy fiat fantasy currencies versus cold, hard, real currencies. And it all fits under the rubric, of course, of savers versus speculators. So a quick headline, the headlines around the whole G20 meeting. Gold set for growing role as reserve asset. This is a study by UBS Bank, and they asked 80 central bank and sovereign wealth fund managers what the most important reserve asset would be in 25 years' time. Half of them said the U.S. dollar. The second most said, and that's 22%, pointed to gold. So this was well above other Asian currencies and the euro. So they're starting to see that, for the first time in decades, central banks have been selling their gold. Now they're ready to start buying gold. Then we have the whole war between the Keynesians and the non-Keynesians. Merkel tells Obama spending cuts to boost economy, not put brake on growth. So apparently Barack Obama called up Angela Merkel, Chancellor of Germany, and basically threatened her that she needs to stoke domestic demand in Germany instead of working toward exporting more.
Well, the problem with this whole debate is that the banks still refuse to disclose how much debt they're sitting on. So after shoveling trillions and trillions at the banks, thinking that this is going to somehow stimulate, and having them simply say, for every dollar you've given us, we've got $2 more in debt, economies like Germany are saying, basta, enough. Let's go to austerity. We know austerity. We know what an economy looks like that is working. It's about manufacturing. It's about savings. We're through with you hedge fund derivative wielding financial terrorists.
Well, of course, and many of the bogus toxic derivatives did blow up in German banks and wipe out German pension funds all over the place. So I'm sure they're ready to, reel back and hide away for another 40, 50 years.
It's the reverse Marshall Plan. First we gave them billions, now we took it back.
Next headline, new home sales plummet. This is new home sales in the United States plummeted by 33% upon the withdrawal of federal subsidies, trying to encourage this market speculation in home prices, of course, and at the expense of savers, anybody who wants to be prudent and not engage in speculation and buy houses that are 10 times their average income.
Let's flash back to 2008. Barack Obama, fork in the road, $11 trillion to spend. A, give it to the banks, the creditors. B, give it to the mortgage holders, the debtors. What did he choose? A, give it to the creditors. What was the effect? Zero. Is the problem still with us? Yes. Is he going to try to have to inject another $20 trillion into the economy? Yes. Will he be allowed to? No, because the banks who now gave themselves those trillions want to preserve their purchasing power, and they don't want him to do anything that might inflate the value of their currency down. So they've become what Ellen Brown, who we're going to talk to in the second half of the show, they become deficit terrorists.
But this brings into the whole matrix of America, and this brings me to this headline from Paul B. Farrell on Market Watch. An invisible gorilla is killing America's soul. Why millions of Main Street investors cannot see they're destroying capitalism. The invisible gorilla he's referring to, of course, is from this very famous study where the invisible gorilla is only invisible to those who choose not to see it. The gorilla is very present. The study found that if you're asked to look at these two teams playing basketball and you're asked to count the number of times somebody passes the ball, 50% of people miss the gorilla that walks through this scene.
Yeah.
So he's saying that Americans themselves, 95 million investors in the stock markets, are missing basically the gorilla of the bankers just stealing the money while they're focusing on the little, their little gains or playing or being churned.
Well, Paul Farrell has done an excellent job over the past few years focusing on what's become known as behavioral economics. And it is transported really from the casino industry. How to get people to part with their money using psychological tricks. And basically, humans are flawed in that their long-term utility value is totally overwritten in their minds by their short-term utility value. In other words, most humans will take the donut today and sacrifice donuts for tomorrow.
Well, he calls it the loser brain. In fact, he points to a University of California study that researched the trading behavior of 65,000 American investors. The conclusion of this study, the more you trade, the less you earn. 77% of Americans were losers, and still their brains are so irrational, so addicted, they can't stop, and they just keep going back.
Well, this is not really new.
Yeah.
Ever since market capitalism has been with us, there has been this idea and knowledge that you need to create balances within the system to prevent this type of self-destructive behavior. The most obvious and natural one, it comes at the Federal Reserve level. Interest rates should be right now 5 or 6% to incentivize savings. But because they've kept them artificially low, especially after 9/11, which was used as an excuse by the Fed to keep rates very, very low to help the bankers on Wall Street and to encourage this type of behavioral self-destructive behavior on the part of the consumer and the investor, knowingly by the people who are essentially in the Wall Street/casino business. I've said it again, I've said it before, until interest rates are back at a normal range of 5 to 6%, this trickle-up economic devastation will continue.
Well, we go from invisible gorillas to invisible pay. Virtual pay for real work. This is a story that highlights this employment agency called Crowdflower. It's a San Francisco employment agency that offers gamers, which is a new word for citizen, I guess, a way to work for a fake living. So there are 100,000 people working for virtual pay with this Crowdflower company. So what sort of work do they do for this invisible pay? Well, they highlight this one woman, Amanda Dorsey, who's 28 years old. She's an unemployed writer working in Florida, and she has spent dozens of hours categorizing search results on eBay, verifying search engine links, and doing other online jobs. And for this, she gets paid in virtual dollars. She says, quote, "There's nothing odd about it. Doing work for virtual currency is pretty much like any other form of putting forth an effort for a reward."
Okay, again, emphasize the language here. The use of the word gamers, taken from the casino gaming industry. And you rightly point out that citizens are now gamers. They went from being citizens to consumers, now to gamers. And we've gone from fiat currency, based on a fractional reserve banking model, to a virtual currency model based on a zero reserve model. Ben Bernanke had recently said he wants to move the Fed to a position of zero reserves, having absolutely no collateral whatsoever on the books of the Fed, which, incidentally, they're already there, which is why they don't want an audit. Because then people would freak out that, we know what, the Fed actually has nothing on its balance sheet. Oh, wait a minute, there's something called gaming that will turn the entire population onto and pay them virtual dollars. That'll save us.
Well, they're using their virtual pay to buy virtual clothes for their virtual avatars online. And they highlight another woman named Wang who works for Swag Bucks. She says, quote, "I started out just doing it for fun, but then I started getting enough swag bucks that I could get Amazon gift cards." So it turns out that she was working for 7 hours to make a $5 gift certificate from Amazon.
Right. 2 words. Casino, gulag. Casino, gulag. That now they're working at rates that are cheaper than the Chinese labor.
That's correct. In fact, the CEO of this company, Crowdflower, Lucas Bywald, he says, "We're just scratching the surface." He expects to pay virtual wages worth $1 million this year, compared with less than $50,000 last year. He says that demand for virtual rather than real wages is more common among younger workers. He says, quote, there will be a whole new generation of kids growing up who won't really see the difference.
Jump down, turn around, pick a bale of virtual cotton. Jump down, turn around, pick a bale of virtual or two. Oh, Lordy, you become a virtual slave.
But you brought up Chinese workers. China's high-tech underclass. The number of college graduates in China is growing far faster than the number of white-collar jobs in major cities like Beijing and Shanghai. Young people who thought higher education would lead to high-paying jobs and chic apartments are instead cramming by the tens of thousands into slums near the IT districts where they seek jobs in computing and programming. The new aspiring professionals are known as ants because of their ability, their willingness to work for slave labor and their willingness to live in very cramped, poor living conditions.
Casino. Gulag.
And in the meantime, Soros says Germany could cause euro collapse. Now, everybody's been talking about this, and he's a currency speculator, so he could be just talking his book. But the thing that interested me about this, in relation to this story about these Chinese ants and the Americans working for virtual pay, he says, right now the Germans are dragging their neighbors into deflation, which threatens a long phase of stagnation. And that leads to nationalism, social unrest, and xenophobia. Democracy itself could be at risk. We've been covering this for the last few weeks, that everybody's threatening Europe, that they're going to lose their democracy. But then he says, Germany is globally isolated. Why don't they let their salaries rise? That would help other EU states to pick up.
Right.
So the Germans, who are the savers, are the ones that are being asked to, they're demanding that you guys should ask for a raise, be paid more.
Right. Well, Soros has a fantastic track record of using the pulpit of the media and these forums like the IMF forum or Davos.
The G20.
The G20 to, as you point out, talk his book. In other words, he's got positions he manages, and he tries to manipulate folks to trade in his interest. And he's the master at it. He's a market manipulator par excellence, and he's made billions doing it. At the end of the day, his philosophy of reflexivity is bone-crushingly simplistic, and anyone who takes it seriously beyond what you'd expect to learn from a 2-year-old must have their heads examined immediately. Anyway, Stacy Herbert, thanks so much for being once again on the Keiser Report.
Thank you, Max.
Don't go away. After the break, as I mentioned, Ellen Brown talking about why North Dakota should be contacted immediately by everyone living in Greece.
Welcome to the future. We speed off to St. Petersburg, city of palaces and paintings, but it's also a capital of innovative industry, exploring the wonders of wireless, setting sail for new frontiers. St. Petersburg lights the way on technology update here on RT. We've got the future covered.
Welcome back to the Keiser Report. Time now to go to Los Angeles and talk with Ellen Brown. She's the author of Web of Debt, a modern classic. Ellen Brown, welcome to the Keiser Report.
Thanks, Max.
All right, Ellen Brown, your latest piece is called Deficit Terrorists Strike in the UK. Is the USA next? What is a deficit terrorist? Who are the masterminds? And in the name of what ideology do they operate?
Well, it wasn't long ago when the G20 decided that their approach to this credit crisis would be stimulus, and everybody agreed to that. And now, all of a sudden, the emphasis is on slashing services, laying people off, tightening your belt in order to reduce deficits, in order to please the creditors, as if the whole purpose of government is to please the creditors. It's all about money now instead of the services that government should have been about. And it's all because of Greece, which has been squeezed out of the market because nobody wants to buy their bonds. But we know that Greece was, that Angela Merkel was actually right, that the EU was under, or the euro was under attack, and that Greece was brought down by speculators. It's an attack by speculators in order to bring down the euro, in order to bring up the dollar. And you could make a case that to create a lot of devastation so that we'll all be rushing with open arms to the creditors, which would be the IMF and the big banks. But what's interesting is that the UK is doing this voluntarily. Greece had to do it because they had to borrow from the IMF, and then the IMF imposes all these austerity measures. The UK has done it in order to avoid being in that situation. I was just in London, and I read in one of their papers that the whole point of this was to preserve the welfare state. Well, what they've done is gotten rid of the welfare state in order to preserve the welfare state. It makes no sense.
It reminds me of the logic of the Vietnam War. We had to attack the village to save the village. We had to destroy the village to save the village. So let me get this.
Right.
Let me get this straight. So let's go back to 2008, when the banking crisis was exploding, and Barack Obama had the choice of whether to raise $11 trillion to $19 trillion, depending on how you count up all the programs, the TARP programs, etc. And he could have given that money. He had two choices: give it to the banks, that is to say the creditors, or give it to the people, the homeowners, the credit card owners, the mortgage owners, the debtors. And he chose the banks because he said that if we give it to the banks, it'll increase the multiplicity of money in the economy. There'll be trickle-down economics, and we're all going to benefit. And what you're seeing and what you're observing is that that is wrong, that failed. The banks merely took that money, gave themselves huge bonuses. The general economy is still stagnant. They're not lending. Now they're coming back after having just bailed out the bankers. They're coming back and saying, forget giving money. We're just going to now go down the austerity path. Is that correct?
Correct. They're blaming it on the people for being spendthrifts and for falling into debt. Well, the people don't have any choice but to fall into debt because there is not enough money in the money supply. All money today, or virtually all money, comes from debt or credit drawn from banks. It's created on the books of banks. And there was a huge collapse in the money supply when the secondary lenders went away, when they realized that these collateralized debt obligations were a fraud, that they were not AAA as alleged, that the hedge funds that were on the other side of the trade that were supposedly going to make good if there was a run of defaults, instead of making good, just went bankrupt. They didn't have the money. So this whole secondary market or credit market went away, which means the banks became zombie banks, the big banks, which meant they couldn't make more loans. So the money supply shrank. And that's what causes a depression, when you don't have the money to pay workers and to buy consumer goods, and therefore businesses shut down. So then you lay off more workers and fewer goods get bought. So it's this horrible syndrome of the economy collapsing in on itself, and it's all caused by a lack of money. So the only way to get money back into the system is somebody has to go into debt. So government debt is actually a good thing. In fact, it's an essential thing when you're in a deflationary cycle. And to say that because the people are suffering, the economy is starving for money, and therefore we have to starve the patient even more by laying even more people off and reducing the money that we're putting out there even more is suicidal.
All right, so let's again frame this a little bit. So in other words, for 20 years under the Greenspan and Bernanke era, trillions of dollars were pushed into the financial markets, and they made financiers incredibly wealthy, multi-billion-dollar bonuses. Then in 2008, due to the incredible leverage that was taken, in some cases 60-1 at banks like Goldman Sachs or Deutsche Bank, was up to, I believe, 100-1. Finally, as Chuck Prince of Citigroup said, the music stopped. Everyone had to stop dancing. You had the credit crunch. And all these banks were unable to pay themselves their bonus money in 2009. So they got the government, thanks to Hank Paulson, to give them another $700 billion, which became $11 trillion, to preserve their bonuses. But the problem was that by creating so much new credit, they threatened the purchasing power of their dollars that they gave themselves in bonuses. So here we are in 2010 saying, now that we gave ourselves hundreds of billions in bonuses, we don't want the value of that money to lose its purchasing power, so we're going to impose austerity. That is to say, we're going to shut the window for money access. You're going to take the austerity because we don't want to lose purchasing power. Right?
Right. And the money that went to the banks did not go into the economy. It went to clean up their books, which are impossible to clean up because there's over $500 quadrillion worth of derivatives out there that have to be cleaned up. So they purposely sterilize this money. They call it sterilization, where they want to make sure it doesn't get out into the economy because they don't want it to do this multiplier effect, which everybody thinks is inflationary. So it just makes no sense to say, you're starving, but we can't feed you. We're putting all this money into banks where it'll just get stuck. It doesn't make it through the banks to the people.
Well, it kind of makes sense if you view these people as tyrants. In other words, they're saying that you make the valid point. You say, okay, you know what? If we just make some money available to the general economy, to the real economy, as it's called, it will create the inflation. It'll create the stimulation, and the credit will flow, and the people that are being excluded from this economy will once again join the economy. But the risk is that the value of the money we stole, the dollars that we stole, the purchasing power might be or inflated away. So therefore, they're taking an adversarial position. The banks on Wall Street have taken an adversarial position to the people and said that no, you can't have anything anymore. We successfully stole trillions from you. Tough luck. Die with your face down in the mud. Isn't that the message?
Right. It would not dilute the value of the money supply if you did we've never tried a real stimulus plan where they actually put people to work making things. But in other countries it's been tried. For instance, in Argentina in 2001 when they went bankrupt, they just printed pesos, put people to work, and as long as before they were up to full employment, this did not inflate prices. What happened was they made more goods and they sold more goods, and people had the money to buy the goods, so they just stimulated the economy. Only when you hit full employment do you even run the risk of inflating the prices, and we're nowhere near full employment now.
Let's return to your premise of your latest story, the deficit terrorists. So you're saying that on one side are the Keynesians who advocate stimulus through governments going into debt by making that available to the real economy and therefore creating a situation where you fake it until you make it, versus the deficit terrorists. These are people who are basically saying, no, we need austerity to maintain the purchasing power of our currency. Without that, all is lost. So going forward, it seems as though all of the voting power and all of the control of the markets and the politicians is in the camp of these, as you call it, deficit terrorists. So I don't see there being any pendulum swinging back in any way to favor the people. Do you? I mean, let's talk about a state that you know very well, and to talk about, people say, you know, this is all out of control. Nothing can really be done. We don't really understand the inner machinations. However, in the United States, in the state of North Dakota, surprisingly, you have an example of a functioning banking system that actually could be a model for the United States. Talk a little bit about North Dakota, please. Ellen Brown.
Okay, North Dakota is the only state that is fiscally solvent, actually has a surplus. It has the lowest unemployment rate in the country. It also has the lowest mortgage default rate in the country. And they've done this Greece could do the same thing. They could set up a development bank that's publicly owned. That North Dakota does not issue its own currency. So just as Greece would have to issue euros or create credit in euros, North Dakota can create credit in dollars. But the advantage is it has its own credit system. It's not dependent on Wall Street. It can borrow from itself, so it essentially gets interest-free loans. That it's not a profit-generating system, so the profits actually go back to the state, reducing taxes. So any state, any country could do this. And it seems to me that while Congress is deadlocked, the U.S. Congress is not going in, doesn't make decisions anymore. But at the state level, you could still get something done, or these little countries could still get something done. In fact, several small countries have actually. I've been approached to help them set up some sort of banking system that would work. So you need to go back to the local level, and then we still have some control at the local level. We need local sovereignty, and rather than what the goal is here is obviously an international currency that we all have to borrow, that's privately issued, and we all have to borrow it, putting us all at the same level of basically debt serfs to this foreign power that issues our money. So what we have to do is get our own money generating ability back, and I think the best place to do that is at the state level or at the local level, as local as you can get.
All right. That is an excellent recommendation for the people in Athens who watch this show. And I know many, many people in Greece have been following what we say on this show quite closely for a number of months now. Get Ellen Brown down to Athens, read her book, Web of Debt. She will explain to you how you can extricate yourself out of the clutches of these predatory bankers. Ellen Brown, thanks so much for being on the Keiser Report.
Thank you, Max.
All right, that's going to do it for this edition of the Keiser Report. I want to thank my guests, Stacy Herbert and Ellen Brown. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.